In this video, I want to share with you what happened in the stock market. If you are somebody who is investing in the market, well, I always try to say that you want to pay attention to where your money is. And of course, the stock market is one of the places in which we can put some money in and of course see it grow over time. The stock market today closed in the red. All the indices are down, and one of the biggest factors driving this is the uncertainty that we see due to tariffs. As we know, last night at the recording of this video, the president slapped around 50% tariff on Canada, and that is not good. Now, of course, there's still some deadline that they need to hit, which I believe is August 1st, and hopefully they can work things out before then. But all those uncertainties are definitely driving the stock market so far. And what that means for us now is, what can we do? How do we position ourselves? How can we manage these uncertainties? And how can we also take advantage of these situations? Now, to be honest, the stock market didn't fall as hard as I would have expected. I mean, considering when this old tariff started, we saw a huge decline in the stock market. But what we now see is that a lot of investors, both retail investors and institutional investors, are all getting used to this environment in which, hey, the president can all of a sudden come out and say something about tariffs. Even though it might move the market slightly, it's not drastically changing the trajectory of this environment we're in. One of the things that I always pull up is the fear and greed index, and it is important to sometimes take a look at this so that you can understand the investor sentiment. And what you see right here is that despite this uncertainty in the market, we still have the fear and greed index, in the extreme greed portion. And that means that, hey, even though we are worried about these tariffs and we're not sure where things are going, people are still bullish. And as we know, the stock market still made a new high this week. And in addition to that, cryptocurrencies are also showing very strong signals as well. As of today, we see a lot of gains in the crypto world. And this is all based on a daily time frame. And of course, Bitcoin also got to a high of $117,000, and it actually got to $118,000 in the morning and kind of retreated down to around 116, and it's kind of bounced around those numbers throughout the day. Now, what does this mean for us? Well, we're going into another week, and there are a few things that we need to keep in mind. One, we got CPI, PPI report coming out on the I believe 15th and 16th, Tuesday and Wednesday next week, whatever those dates are. And that could drive the market. But here's something I also want to point out to you. You see, this information that came out today, the Treasury post unexpected surplus in June as tariff receipts surge. This is going to be a sticking point in what the president can use in, of course, positioning himself that he's done things correctly, or at least is on the right track by increasing tariffs, and may continue to be a solid leverage, or at least lever the president can pull and get back-ends from his supporters to show that the things that he is doing are working. But as we know, the president is also trying to get Jerome Powell to reduce rates, and we don't know how all of this is going to play out. There are speculations out there that interest rates are likely going to be dropped twice before the end of the year. There's some that are saying 3 times, but we don't know, because depending on the outcome of CPI, PPI data, which reports inflation data, that would determine what the Fed are likely going to do. And that means that the stock market remains sensitive to all these factors that I've mentioned. Now, one of the things I always say is that if you're trying to invest a lump sum amount into the stock market, what you want to do is to not try to time the market, because in the process of waiting, trying to time things, you're going to miss great opportunities. There are situations in which all it takes for you to make drastic gains within the market is a few days in the year. And if you're out of the market within those few days, your returns might be minimal. The goal is to continually invest on a regular basis, stick to a plan that you have, to disregard the noise, and let your money keep working for you. Now, this is also a good time to mention one of the best stocks out there that we know is Nvidia. And we know that Nvidia has risen to new highs. It got to around 167 today, which is unseen. And if I go, let's say, even go 5 years out, okay, this stock has returned about 1,473% over the years. And if we just go year to date, it's up 19%. If we go 6 months, it's up 23%. 1 month, it's up 13%. And just 5 days, it is up almost, or I would say 4.27%. That is great. It is very unusual for this stock to move so quickly, especially in an environment where there hasn't been very strong reasons for it to do so. And this is a good indication to us that there is a lot of momentum in the market, bullish momentum, and a lot of people are bullish about the stock in particular. Another one is the AMD that has done really well. And this one is something that I believe that if you had bought more of it when it crashed down to like, I believe it's like $80 something, and actually if I look here, about 80, 78, 73, 85, somewhere in those ranges, you would have done really well, because at this point you are almost about to double your money. All right, if you bought it at that 70 something range, you're up, quite a lot. Now, with all of this said, like I said, the goal is to continually invest and pick your sectors carefully if you're choosing to pick individual sectors to invest in. That is all I just wanted to share with you in this video. If you have found value in this one, please do not forget to drop a like. Do not forget to subscribe to the channel, and don't forget to share this video with a friend. I'd love to see you in a future one.